I'm Peter Rose, founder of Longwood Currency Trading, and I wanted to chat a little bit today about rules and what happens when you break them. Jesse Livermore had a really interesting quote that I find is really applicable not only in general to trading, but to a situation I'm in right now. He said that the only time I really ever lost money was when I broke my own rules. And I do that. I break my own rules. And it's very, I guess it's a bad habit that I developed when I was as a real estate investor. And I was a real estate investor for 40 years, very successful. I mean, that's why I was able to retire. But I was able to break rules because of the time frame that I was dealing with. So that if I broke a rule, I'd go, oh, crap, I got to fix that. And then I would go about fixing whatever the problem was. Maybe it was giving some tenant a break on rent when I shouldn't have because they had taken advantage of me before and I shouldn't let it go on. Whatever the situation was, you have to have rules in order to run your business, particularly your investing businesses. And so in real estate, I've mentioned before in other videos, the reason that I got out of real estate and I'm now doing the currency trading is because of the fact that when you realize that you're wrong or that you've made a mistake, boom, you just get out. You get out. When you enter a trade and it's going against you, you get out because you can always re-enter it. You always get in again. In real estate, that's really different. Your mindset is so different because of the time. I mean, even if you're fixing up and flipping houses, you're looking at 3 months to do that, to run something like that. 90 days is not unheard of to do a good renovation. I never was a flipper. I never turned stuff around. I always bought it and held it. I believed in Warren Buffett's statement that don't buy the stock of a company if you're not willing to own the company. It just doesn't make sense on a long-term basis like that. That you would do short-term things on long-term investment. It just doesn't make any sense. So anyway, when I get into the currency trading, I have rules. I have good rules. I have rules that keep me out of the deep woods. And yet, because of my proclivity before in real estate, well, I'm going to try this. I'm going to try to raise my rent a little bit, or I'm going to paint this building and I won't paint the other one. I'm going to see if there's a differential in rent that I can gather. I mean, those are things that not only take time to implement, but they also take time in order to see the results of the effect of that. And then that gives you time to make a decision as to what you want to do. You can collect and gather data. Look, when I'm trading down, scalping on a 5-minute chart or a 1-minute chart or something like that, I don't have any time. I have to make decisions and get in and get out on a second basis. I don't have 5 minutes to figure this stuff out. So what happens is I'll get into a trade and I'll say, gee, I wonder if I held it just a little bit longer. The market data is coming out, or the economic forces, whatever, because of such and such a criteria. Either it's the U.S. Fed doing something, or maybe it's a foreign country on the other side of the trade that they're doing something, and the combination of those two things should make the price go up or down, or whatever it is, and it's not doing that. And so you think, well, maybe this is just going to take a little bit longer to manifest itself. So here we are. This is the end of May in 2020. So we've been going through this COVID-19 crisis for a while, and the gyrations in the stock market and in the XY, the dollar index, and currencies in general have been just all over the place. So I was doing really well from the first of the month. From the first of the year. My little account, because I, wiped out my big account, so I'm just working a little account right now until I sell this last building, and then I can refund and go from there. So my concern is, or my claim to fame is, working on a percentage return on the bank that I have. So it doesn't make any difference if it's $5 a point or $5,000 a point. It doesn't make any difference, because the percentage return that you get on one size bank translates to another size bank, as long as you are rigorous in your rules. And I think that's a problem with a lot of folks when they go from a small account to a big account. The money frosts them out. The other day I talked about how you set a stop, whether it's mental or whatever. And I said, don't do it on a dollar-based amount. Professional gamblers don't play with money; they play with chips, because it's not a Cadillac, a car, or a house or something going across the table. It's just, black chips or white chips or whatever. You have to abstract yourself from the dollar, because your emotions get, holy shit, I just lost $500. And you just can't say that. So, oh, holy shit, I lost 10 pips. Okay, you can put that into the relative scope of the number of lots that you're trading after the fact, but it's 10 pips. And so if your profit target is 20 pips or 40 pips away, and you trade 10 times with that process, and you've got a good win-to-loss ratio, you're going to be okay. But if you lose $500, that's different. You know what I'm saying? So what Livermore is saying is you got to follow those rules. And to a certain extent, I think that I fail in following my rules. Actually, I only fail in following one rule. And that's the one that I tout as the most important, and that's get out when the price is going against you. Just get out. I'm sitting here with enormous paper losses on this small account, because a month and a half ago or so, I was trading. I was doing really well. From the first of the year, I think my account was up, 30% in a couple of months. As a percent of risk. So, that's doing pretty good. And took it up another 10% in a couple of week period of time, when some of the crisis with the markets was going on because of the COVID-19 crisis that was spreading throughout the world. And I'm in the currency markets, and I'm looking at the economics of the two pair countries that I'm trading, and I'm saying it looks like this is going to happen. The price action indicates that, and I'm trading along. And like I said, I was up about 10% on my risk in just a few days. And I got into a short trade. Yeah, look at the price action of the pound dollar as it sits today, as opposed to where it was a month ago. And it's just, the loss is just, I didn't get out. I didn't follow my rules. And it's one of those things that's a very similar situation to what I would experience in real estate. I've set my rental price at a certain amount, and I advertise it at that, and I'm not getting anybody coming in the door. But rather than reducing the rent, I look at the economic situation and the time of year, and I go, I'm just going to have to wait a little bit longer for that amount of rent to be realized. And unfortunately, you do that for 40 years, you build up some pretty strong habits, and those habits did me well. I understand real estate. I'm really good at that. But it's that function isn't really transferable dot for dot into the currency trading. You can't sit there with a position and say, well, I think that's just the kiss of death. And that's what I did. I'm not being a dumbass about this. I'm just being honest. This is what happens, even an experienced trader. You look at what's going on, you look at the economic conditions around you, and you say, I had taken 4 4 or 5 short trades in a row. I was picking them up. His price was spiking down. It looked like it had plenty of juice and momentum to go. I took my short position. It went in my favor pretty much, and then it flipped around and it started to chatter up. And I thought, well, this move hasn't finished because of how you evaluate chart positions and the economics that's involved in all this stuff. So I'll let it go past my, my 8 pip stop. And then I went out and had a cup of coffee, and all of a sudden I was 40 pips out. And then I was 60 pips out. And I'm sitting there going, oh, this just is stupid. This is going to be a normal reversion to the mean, and then it's going to bounce off that, and it's going to do all this kind of stuff, and, maybe God will smile on me, and everything will be okay. And it wasn't okay. It went 100 pips against me, 200 pips against me. And I'm sitting there, and all of a sudden I said, well, I just don't give a shit anymore because it's a small account, and it'll come back. At some point, it'll go $1 bazillion against me, and it'll turn around and come back, and I've got enough money in the account where it would have to go really far against me to wipe the account out. But all of a sudden, I'm thinking in terms of dollar value. So the dollar value doesn't really mean anything because of my net worth and all the rest of the stuff. And so the whole trading plan goes to shit because I don't follow my rules. And man, I just kicked myself in the ass because this isn't the first time I've done this. And so, as a cautionary note, please, when you set rules for yourself in your trading, don't second guess them, because it might turn around and it might work out okay 3 or 4 or 5 times. But the one time it doesn't work and you sit there and you go, well, it'll work, it won't take back. It not only won't take back the gains that you made breaking those rules and succeeding, but it'll wipe out your whole account. It really will. And if you don't have a lot of money to back yourself up, if you're trading short stacked on a couple of $1,000 account or a $3,000 account, is probably what the average retail trader is willing to put at risk in order to learn their skills. That's all the money that you can come up with is $3,000. And so to make $10 or $20 a day on that, that's big. That's a big percentage gain and shouldn't be sneezed at. But you start losing $100 or $200 or $300 of that, and man, let me tell you, it's devastating if you don't have the money to replace it. So I can lose $500 or $600, and it's not going to change my lifestyle that much because I'm thinking of it in terms of dollars. That's what happened. I thought it in terms of dollars. I broke my rule. Don't trade for the dollars. You trade for pips. I mean, it makes your thought process so much easier. It's 8 pips against me, I'm out. Oh, it's $40 against me. It's $400 against me. It's like you get into all this analog decision-making process. Excuse me. And you just can't do that. You got to listen to what Livermore said. The only time he ever lost money was when he broke his own rules. It's not important that your rules are parallel to mine, or that you try to figure out how to trade the way that I trade, because it doesn't make any difference. You're never going to trade like I trade. I'm never going to trade like some of the people that I have looked at that are successful traders. I trade the way I trade. Emerson, in his essay on self-reliance, said that he was saying, well, you got to know what, paraphrasing, you got to know what Plato said, and you got to know what Aristotle said, but put it not what others think, but what you think is important. But you just can't pop out of the womb and start making predictions about the world, and you do have to read Aristotle, and you do have to know what Plato had to say, and you look at how those things impact you, and then you figure out how you want to conduct your life, as the Buddhist would say, in a right-thinking, right-living manner. And trading is the same. You look at many, many different systems and ideas and processes, and you work up your own thing. I'm a scalper. You may be, scalping, that's horrible, you dumbass, you can't do that. I'm as afraid of long-term trading as people are. A lot of folks are afraid of scalping, and I've had some videos on that before. But the key to what Livermore is saying is when I break my own rules. He didn't say Bob's rules. This is my own rules. So you look at the way that you want to construct your trading plan and what those rules are, and then don't break them. And in the process of that, make your life easier, and don't think about the dollars that you're winning and losing, because that's based on fear and greed, your emotions, and hope will come into play, and that's what will kill you. So set up your rules, but have all those rules be pip-based, and don't be a dumbass like me and break your own rules, okay? Peter Rose, founder, Longwood Currency Trading. Have a great day. Have a great trading day.